Planet Labs and Satellogic and Black Sky and ImageSat. I mean, all these companies are inking international deals with, India and Vietnam and Indonesia to build their own organic capabilities. So it's going both ways. It's causing a bit of a balkanization in the industry. And I think you'll see the companies try to play both sides.
From the Defense and Aerospace Report, this is the DownLink, a podcast about the intersection of space, the space business, and defense. Not just what's over the horizon, but what's happening above it. I'm your host, Laura Winter. This week marks the end of the first quarter and the beginning of the second, but the real news is the Independence Day tariffs and that markets around the world are shedding value. Independence Day is what U.S. President Donald Trump is calling his latest round of tariffs. These import duties or taxes are being placed on imported goods from around the world at varying rates. According to the executive order, the U.S. president is declaring a national emergency to correct what his administration sees as, quote, large and persistent annual U.S. goods trade deficits, unquote. He did say a couple of weeks ago that these tariffs were coming. Nevertheless, on Thursday, all of the major U.S. trade indices took a major hit to their value by the end of the trading day. As I must wrap up this episode a day earlier than usual, things could change for the better or for the worse this week before Friday's closing bell. But here are some of the highlights from Thursday's close. It's heavy on numbers, but please, cut me a little slack. This is the Space Money episode. So overseas markets, generally speaking, so not all, suffered losses in the 3% range. On Wall Street, the losses were more severe. Starting with the worst first, the Russell 2000 index, which covers small cap companies, lost more than 6.5%. That means it slid into bear territory. That's more than a 20% loss compared to its all-time high, which was recorded last November. The NASDAQ, that's the index with the most space companies, it closed down 6%. That loss puts the index into correction territory. An index is in correction territory if it has lost 10% or more of its value since its last recorded high. By the end of Thursday's trading, the NASDAQ had lost more than 11% since its last high in July. The S&P 500 had its worst loss since before the pandemic in 2020, a slide of almost 5%, and is also now in correction territory, down 12% from its all-time high in February. And the Dow Jones Industrial Average lost just under 4%. And it is just a wee 0.8% away from correction. So how did this sell-off affect space companies? It depends on which one you look at. The Houston, Texas-based space exploration company Intuitive Machines was down more than 9%. Redwire, a space infrastructure technology company out of Jacksonville, Florida, lost more than 5%. But it's not all gloom and doom. Lockheed Martin, a U.S. defense contractor with a strong space division, bucked the trend. It closed up 0.42%. But this is actually just the beginning. Many of the nation's major trading partners are vowing a response. And how that will play out, how it will affect the U.S.-based space economy is uncertain. And that's a word investors really don't like. To understand where we are and how this may all shake out, how will investors and U.S. space companies adjust, and what's coming in the next quarter, we have Chris Quilty and George Pullen. Here's our conversation. Hey, Chris, George, it's great to have you both back on the podcast.
Thanks, Laura. It's great to be back.
Thanks, Laura. Hey, Chris, good to see you again.
I can't see you, George.
All right. It's great to have the Money Gauchos here. Before we take a look at what's happening or what has happened in Q1 and what's coming up in the next quarter, take a minute to briefly introduce yourselves. Chris, want to start?
Thanks, Laura. Chris Quilty. I am a financial analyst who has been writing research on the space industry for 20 years. We publish our research on QuiltySpace.com, and we write on both company financial, thematic, and market applications in the space industry.
And George, what about you? And do not forget to explain the fifth industrial revolution.
Sure, Laura. My name is George Pullen, and I am a space economist. Yes, that is a real thing. I am with MilkyWayEconomy. We are a fifth industrial revolution think tank. The fifth industrial revolution is where we're headed after this fourth industrial revolution. It's going to be the industrialization of space, and MilkyWayEconomy provides consulting services and makes investments into companies that are looking to crack into that part of deep technology.
Excellent. Again, it's great to have you both. Now, I would usually want to open this up with a question that asks you guys to tell me what you think are the most important and consequential space and business developments in the first quarter. But I think you'd have to be living in a cave on a desert island to not identify the Trump administration's tariffs as one of the most consequential developments affecting the U.S. economy. Other national economies, in fact, and the equities markets, no matter the sector. So, George, got to start with you because you are our economy guru, and I need you to set the table to help those of us who are not economists understand the fundamentals of why there have been very few days out of the past 90 without a headline containing the word uncertainty. George, want to explain?
Sure. So, essentially, for the last 40 odd years, we've been going through a period of time in global trade where we've been reducing barriers to trade. And some people have called this the free market economy. There's some debate about just how free it was and who the winners and losers were. But what we've seen for that last 40 years is a huge increase in trade flows. That means both more exports, which everybody loves exports for their country because that means that there's more people building more things in their country that they could then get to ship to other countries and make a profit. But also means more imports. So that's more things coming from the other guys and gals countries into ours. And that improves our standard of living. We get to have a variety of goods and services coming from a variety of places. That has been the global and world order for pretty much the last 40 years, but certainly ever since the end of World War II. The reason there's so much uncertainty right now is because the word tariffs are being thrown around quite a bit. Now, tariffs are when an additional fee, tax, are placed on goods that are imported into a country. Now, tariffs can take a lot of different shapes, and we're not going to do an Econ 401 on tariffs, but essentially what a tariff does is it increases the price of a good that enters into a domestic market. Now, some can say this is because those prices that were entering the market were conflated, right? They were artificially low. An example might be that if you have a heavily subsidized plastics and chemical industry in country A, and that country is now exporting all of those chemicals and plastics, it's really hard for anybody else's chemicals or plastics industry to compete. And so they're able to undercut domestic production and import those goods or services. We see these conversations not just around plastics and chemicals. We also see these conversations around cars, but also goes all the way down into components and parts. And really what this means is that relationships, geopolitical relationships, are getting much more complicated. That's a fun word, right? They're getting much more complicated as we figure out what exactly these tariffs or proposed tariffs and then reciprocal tariffs might mean to our relationships with other countries and what it might mean to our trade flows. We just came off of huge supply chain disruptions after COVID, and some people who are really screaming in dire forecasts think that we could see other huge supply chain disruptions this time. I'm less concerned than some of the people who are that dire, but I do think it's something that we should discuss.
So, how does all of this affect the space economy, or has it, or will it? It's got to, right?
Right. So I think the first thing is that when we think about economy, there's two different things we're talking about, right? A lot of people, when they say economy, they're talking about GDP, right? So when economists talk about the economy, we're talking about gross domestic product. We're talking about GDP, right? GDP is the combination of consumption, investments, government spending, and then trade, right? And it's technically your net exports. That's what economists talk about when they talk about the economy. They talk about GDP. There's also the stock market, right? And the stock market's just that small set of publicly traded companies and obviously employers that it relates to. When we talk about what the impacts are on the space economy, how does it impact space businesses, consumptions, space businesses, investments, government spending? That's when it gets interesting, right? Because we don't see a decrease in demand or consumption of space technology. We haven't seen a change in those demand signals. Investment, the I part of GDP, is a little bit more complicated, right? So when you make investments, you're making investments for the long term. And since you're making those investments for the long term, the less certainty you have, the more of a premium you have to put on it. And so we'll definitely see with increased uncertainty, a change in investments, right? Likely a decrease in investments. The other part of it is government spending, right? Let's talk about government spending. So government spending is supposedly being reduced and cut. If that continues, we'll definitely see an impact on space companies. Now, I would argue again, it's early. It's just the end of Q1. We haven't seen that bear out. We've actually seen a great Q1 for a lot of space companies, a lot of fantastic announcements, which I'm sure Chris will go into. He covers he covers that area way better than I do. So I think right now it's just the uncertainty that's being priced in. And I think the other part of it to think about beyond the uncertainty for the investments would be what this means for the smaller companies in their continued funding, in their supply chains, and if they're getting anything from overseas, and if the things that they are importing to put into their good product or services, if they might be subject to tariffs or subject to disruptions. I think that's the concern. But again, I don't think we've seen any of those in Q1. I think Q1's actually been really good.
Okay. So now, Chris, you are our markets Yoda. Why is it that when I tune into Bloomberg Radio, it's just a bummer? Both the S&P 500 and the NASDAQ were in correction territory, having lost more than 10% in value. That was 2 weeks ago. Since then, the markets have more broadly clawed their way back up a bit, but the S&P 500 has lost 4.9% since the beginning of the year, and the NASDAQ, it's lost 8.7%. What's happened, Chris? Discuss.
Yeah, well, I think George already said it. The market hates uncertainty, and we're at peak uncertainty, right? So if in doubt, sell, I think is partly what's happening. I think investors may be optimistic about the long-term impact of what the administration is trying to do. But as we sit here on April 1st, with announcements coming tomorrow, I really don't have a good sense of what the new tariff and income tax structure might look like. We know the outlines of what the administration is trying to do, which is to bring jobs back to the U.S. And if you believe that that is the long-term impact, you should be positioning, accordingly. And I'll just note, I used to joke that if I was not in the business that I was in of selling research on space companies, I'd be in the business of domiciling foreign company manufacturing in the U.S. Because people ask me all the time, like, how do I set up in the US? How do I access this largest space market in the world? So I think that trend was dominant already. I think potentially the tax laws may accelerate it. But then you've got the countervailing trend that we're also seeing, which is the anti-Elon Musk, anti-SpaceX, anti-Tesla, anti-whatever, which is forcing a lot of countries to create their own sovereign capabilities. And just to give an example, in the Earth observation industry, I can go down the list of Planet Labs and Satellogic and Black Sky and ImageSat. All these companies are inking international deals with, India and Vietnam and Indonesia to build their own organic capabilities. So it's going both ways. It's causing a bit of a a balkanization in the industry. And I think you'll see the companies try to play both sides, which is, of course, tricky because the end of the day, a lot of these countries are looking to create jobs and they're thinking about specific jobs, traditional jobs. And as we know, in the future of AI, what we think were the jobs, the great jobs to have, may not be the great jobs in the future. The space industry is sort of going through its own, coming to earth with, hey, is space jobs about people laying cables and building ground stations and deploying hardware? Or is it more around the services, whether it's direct-to-device services or broadband services that are going to enable other types of jobs? So it's a pretty dynamic time right now. And I think the markets are just sorting that out. I think a lot of prognosticators would say that the markets are richly valued, Warren Buffett and his cash position and whatnot. So I think the fact that we're seeing a little bit of market disruption here isn't overly concerning, but certainly in the near term, if you're looking at your 401k, it's been moving around a lot.
I want to follow up a bit though with you because you at Quilty Space have these different indices, right? And I really love that, but I'd love to understand who's in what indice and how they've actually fared in the first quarter. So who makes up your core satellite and space index and how have they fared in the first quarter? And just give us a quick snapshot because we do actually have a bit to get after.
Yeah, so we kind of break up the industry as you typically do on Wall Street by the way that the stocks trade and where they sit in the ecosystem. So what's interesting is the stocks that we call our frontier stocks, and these are the ones out doing things in moon landers and things that are not typical of the industry. Those stocks, which include even blue chip-ish companies like Rocket Lab, have really seen significant moves. And specifically last year, around the time of the election, many of these stocks doubled or tripled to the upside. In the meantime, what you would think of as the blue chip stocks, the traditional SATCOM operators, the Telesats and SESs and Eutelsats of the world have been, creamed for years now. But then again, you get to some interesting reactions here with Eutelsat. So Eutelsat had their stock absolutely fly after the Zelensky meeting with Trump in the White House, where everybody immediately concluded, okay, this is going to be bad for SpaceX. And now Europe has the chance to backfill with Eutelsat OneWeb, and hence, Eutelsat gets a big pop. So while I can take different sectors of the industry like Earth observation and the satellite manufacturing companies and bucket them, and each of them has a little bit of a different trajectory, in part based upon their competition with SpaceX, which is dominating everything in the industry today. The reality is that there are a lot of one-off situations that you really have to pay attention to.
Can I add something? I think it's important that when we're talking about these one-offs, we also should keep in mind that for other countries and for many private companies, they're also continuing to be highly focused on using the space environment for the observation of weather, using the space environment for the observation of fires, natural disasters, and other extreme events that we're seeing. And so, for example, ESA has their space environmental reports that they put out. I know organizations like Planet has their hyperspectral satellites for agriculture monitoring, and you've got other businesses that are focused on different segments of the market that we'll see that are more appealing, perhaps to international partners and perhaps more appealing for international partnerships. And that's where the revenues will come from, and that's where the contracts will come from, as opposed to what we were seeing before. And I think that changes. I'm going to just continue to see uptick over the next few years as Europe decides that they're going to go their own way in space.
Oh, we're going to get after that in just a second, actually. But George, I wanted to transition to you. So I want to stay with you to your region of the space sector, and that's the technological frontier or deep tech, right? Where private capital meets entrepreneurs and engineers. And as you have taught me, private equity investors are a bit sensitive to interest rates, and those that have or are considering a stake in space are looking for companies that have government contracts, right? So first, the Federal Reserve Board did not lower interest rates, kept them at 4.5%. The Fed chairman, Jerome Powell, used the words uncertain, uncertainty, or uncertainties 6 times in his statement, explaining to the media why they unanimously voted to leave interest rates unchanged. So that's part one. And part two is that the Doge Bros, led by SpaceX CEO Elon Musk, are inside NASA and the Pentagon looking for contracts to cancel. Secretary of Defense Pete Hegseth has ordered 8% reductions in costs from every military branch every year for the next 5 years. But there's Golden Dome, right? So it's kind of a mixed bag. So how are private equity investors reacting, and how are companies at that technological frontier adjusting?
That is a great question. I think the first part of it is we've seen the interest rates hold steady because, in part, we've seen inflation, and I'm just going to use CPI, core pricing indexes. We've seen inflation stay at or below 3% for both January and February. So without that extreme inflation pressure, other than for my eggs, because as you know, I eat a lot of eggs and it's concerning to me, but for everything else.
I can't find any eggs anywhere, honestly. Seriously, I have not seen eggs on the shelf of my local Trader Joe's. So anyway,
George lays lots of eggs if you need any.
Oh, but Chris is on fire.
oh yeah, baby.
All right. So anyway,
Okay.
I'll go back to my agricultural small 5-acre plot of land and keep farming. Anyway, so what I was saying is because those inflation numbers have been down, that's why we haven't seen a move in interest rates. We've also seen strong prints on the labor market, right? We haven't seen unemployment spike up. And so without inflation spiking, without unemployment spiking, I think people will be holding their breath for a while to see a change in interest rates. And so that's why the Fed has held steady. The next part of the question, though, is what's going on with technology? What's that mean for technology investments? So when Uncle Sam is saying that he's not going to spend as much money as he used to happens, that is definitely the example of when someone sneezes, the smaller people in the room all catch colds. We've all heard that story. We definitely see that, right? And so what I've noticed is that many of the companies that I've been following for a while, and some that I advise, who have been focused on space data, who have been focused on space situational awareness, who have been focused on, let's say, increasing power or increasing compute on satellites, they're getting lots of attention because they're seen as part of the wave of AI, right? They're seen as, oh, well, if this is more data, then that must mean more AI. And well, everything AI is going up right now. All those boats are rising. So even if Uncle Sam cuts over here with their right hand, well, the left hand is still saying AI is the future, big data is the future. I mean, we just saw Space Force put out their 2025 strategic data and AI action plan, right? So this isn't going away. And so where the cut's going to happen, I mean, your guess is as good as mine. But as far as what the market is saying, they're saying, okay, what markets are you feeding into and supporting? And if the markets you're feeding into and supporting relate back to big data, relate back to AI, then they're still finding very willing investors.
And how are space companies that are at the technological frontier adjusting, though? Because, and you work with a number of them,
Yes.
right?
Yes.
How are they adjusting? Because I don't remember them being heavily invested into developing AI products or services.
So honestly, we've had a lot of discussions with portfolio companies about what is their AI strategy, right? How is AI going to be part of their internal processes? Not necessarily their customer-facing work, right? But how is it going to be part of their internal processes? How is it going to improve what they're developing? How is it going to get their technologies to market quicker? So they're definitely starting to embrace this. As you know, I was a pretty late adopter. I wasn't really an AI fanboy the last time we talked, but I have seen the light I definitely see how it can improve, many of the company's performances. And I think that's also an indication of what the expectation is from private equity and what the indication is from venture capital, right? They want to know that even if you're building hardware, right, even if you're building something in hypersonics, that you are keenly aware of where automated processes and machine learning can improve what you've been working on. And they want to know that you're internalizing those. They want to make sure that you're exploring them and that that's going to be part of your business model. And I think it's a necessary pivot for all these companies right now because it's going to be the commercial market and it's going to be VCs that have to be enticed to continue to participate as Uncle Sam tightens his belt.
And just, about AI and what could possibly be a huge opportunity for the right collection of companies. I mean, Golden Dome is going to require AI if it's going to work. There's 150 seconds you have from launch for the boost stage to actually connect with that missile. And those things generally need to be done with AI because that's a lot of analysis and decision-making to be done in a very short amount of time.
I agree. I don't think it's just Golden Dome either. I think it's also when we think about what comes next, right? That's something a lot of our time are spent thinking about what comes next. And I think when we forecast this out, it's what do space drones look like? Right? What level of autonomy is needed there? Right? How do we make for successful moon habitats without greater automation? That automation is going to require significant delays from ground to the moon, et cetera. And so what comes next is also something that is going to require more data. And that also probably means AI, just like Golden Dome, except again, what's on the horizon, what's after it.
So while most of our conversation has been focused on the United States, I really want to turn our attention to Europe. Quilty Space had a recent note about the European Commission's push to make 800 billion euros available in loans. And if you listened to my podcast last week, you would have heard a discussion about that as well and the policy surrounding that. But this is 800 billion euros available in loans and other vehicles to rebuild Europe's defense industrial base. And space was mentioned quite a few times in the proposal paper that came out of the European Commission. It even said the words space and warfare together. And from the SAT show here in Washington, D.C. a couple of weeks ago, European companies were really bullish on the future. But really caught my eye was what the SES CEO Adel Al-Saleh said. He said that SES was not just investing in Link Global, which is a U.S. company, but that they were bringing Link Global's manufacturing to Europe. In fact, Link Global's offices are located in Northern Virginia, the heart of the U.S. defense sector. And that's not the only deal that involved Europe. AST Space Mobile announced a joint venture with Vodafone. Rocket Lab plans to acquire Monarch. Is there a push to get to Europe and perhaps tap into the government interest in beefing up defenses, which has to include secure communications? Is Europe a greener pasture at this time?
Yeah. So, I kind of mentioned this previously, is you're seeing the investment flow go in both directions. The IRIS Squared program, which is the European government attempt to create a government-run mega constellation. That's a $11 billion US program that'll build LEO, MEO, and GEO satellites. And it's done through a public-private partnership with the satellite operators. Hispasat, Eutelsat, and SES are the big ratepayers there. Actually, what's kind of interesting about this is normally in that situation, you'd expect the satellite builders, right, to be in the game, and they would make sure that they got the deal. But in this case, both Airbus and Thales Alenia Space, the two big local satellite manufacturers, are kind of both back on their heels financially because of the problems that they're having with their software-defined satellite program. So they both backed out. So what you have are basically the operators dictating with the EU government what this system is going to look like. But bottom line is they put in rules that said it's European only. And, the reality is it can't be European only, just like in the US, we are dependent on Europe for certain components. It's going to be the same way. But, we have seen in the lead up to this some cross-border acquisitions, right, of US companies getting assets in Europe that give them a proximity to be able to compete on these programs. The Brits have been on this game for a couple of years now since Brexit of being European enough so that they get to play, but not. So I wouldn't be surprised if we saw some more acquisitions. Now, the IRIS² program is under, quite a shadow. It is a government-run, government-dictated program. They're hoping to get satellites on orbit by 2030, which, correct me if I'm wrong, is the end of the decade. And SpaceX will launch another 10,000 satellites by then. We'll see. But nonetheless, it is a program that will go forward, right? I have very little doubt that whether it's economically feasible or not, this program will be pushed through. And hence, there's a pretty good opportunity for companies to ride along on that particular effort. We are seeing some of the same things happen internationally. As I mentioned before, a lot of it has been in the Earth observation sector, but you've got, JSAT, in fact, just ordered 10 Pelican satellites from Planet, to advance their efforts. But there are other things happening in Asia and outside of Europe around optical communication systems. Again, that's a JSAT effort. Other things kicking around in Southeast Asia, and India is always out there right now as a user of capacity, but certainly a company that is a spacefaring country with capabilities. And believe it or not, even though we focus on the SpaceX and OneWebs of the world, there are other companies out there percolating along. Logo Space made an announcement earlier this year, I think. A bunch of former software SpaceX engineers want to build a millimeter wave broadband system. So there's always lots of stuff kicking around, and you'll see some of that coming out of Europe. I wouldn't be surprised.
And George, there's a part of this for you and for the space companies that are developing technologies, because when I was at SAT Show, I ran into a representative of the Canary Islands, right? And this representative touted that the Canary Islands wants to build a spaceport, and that they were specifically at the SAT Show to make connections with bootstrapping smaller companies that would possibly entertain pulling up stakes here in the United States as best they can so that they don't run afoul of ITAR regulations, and actually move to the Canary Islands and set up shop and do their development work there and make it so that it is part of the European market and providing, sovereign capability. Is that something that the companies that you work with, or in that, sector, in that technology development sort of arena, is that something they would actually entertain? Is that something they could seriously consider?
I mean, are they going to pay for me to still come home 4 or 5 times a year? Because I still have to make it home for Christmas. So if they're going to pay for the plane
Well, you could have
tickets home,
Christmas on the beach.
yeah. Well, I'm a Mainer tried
Doesn't
true,
the U.S.
so
have
I
a
need
claim on the
snow.
Canary Islands? I think we own those. Yeah.
Oh my goodness. Okay. So I'm going to leave that one there. No, but seriously. So I can tell you to a company, I've heard no talk among the folks that we're invested in or the boards that we sit on of anyone talking about pulling up stakes and leaving the US. Again, it's early days, right? And I think people, even though it is constant and the news cycles are never ending, I think it's important to remember it's early days. I think also if we think about what I'm not going to say typical space founder because there's no such thing, but what the avatar of many of these space founders looks like. Many of them are people that come from either a NASA or a military background. They have really strong red, white, and blue in their veins. And even though things are tumultuous or uncertain or volatile, pick your word, they're not looking to leave right now. Now, asterisks. That being said, if a place like the Canary Islands or somewhere else put together a very compelling package, I mean, as small or medium-sized enterprises, they might have to take a really hard look at it. But as for me and mine, we have not seen any across our desks and had no serious discussions like that.
And now, unfortunately, we have run out of time, so we're going to have our usual lightning round at the end. And that is your favorite part, Chris, I know, because it's about predictions. So we'll start with George. George, what would be your number one prediction for the second quarter, and just the second quarter, if you may?
My number one prediction for the second quarter is that we're going to see increased cadence from Starship. We're going to see increased cadence from FCC issuing licenses to mobiles. And we're going to see a general move toward deregulation that increases activity, not decreases activity in the space sector.
And Chris, what's yours?
Ooh, I think when we did this last year, this time, I said nothing matters until two things are resolved. Number one was interest rates, and number two is the elections, which kind of bagged off to Q3 instead of Q2 answer, which you asked for Q2. And I'd say, even though George talked about interest rates earlier, I don't like interest rates are not as much a thing. I mean, they are. I mean, like, absolutely. But they're not front and center in most investor discussions I have. And obviously, the election's been resolved. I got to tell you, going into Q2, I'm kind of clueless because it depends what happens tomorrow or this week with, announcements on tariffs and taxes and regulation. I mean, things are moving so quickly. We normally do a write-up on mega constellations that's like 5 or 6 pages. It was 9 pages long coming out today, just because there's been so many developments. So, long story short, I started the year like back in January. I said, I'm more excited about the space industry than I've been, coming into a new year at any time I can remember in the last 20 years. And that's just due to a confluence of a lot of things, right? I mean, launch costs are coming down and more launch vehicles are coming online and more constellations are being launched and more private capital is coming into the industry and more public companies are being successful. And we've got an administration that is, sort of full force behind the space industry. And on the backside, we got the best, worst thing that's ever happened to the industry of the Chinese pushing us forward with their own space station, their own lunar activities. So I would say I'm constructive, like, again, overall, but like how we go from here to the end of the year and what it looks like in between, I'm still waiting for answers.
Thank you, I guess, for the non-answer. But I'll take it. Chris, George, thank you both so much for their time and for coming on the DownLink podcast.
You got it, Laura, anytime.
Always a pleasure.
That's it for this week. For your daily dose of award-winning defense coverage, listen to the Defense and Aerospace Report with Vago Muradian. And for the maritime domain, listen to Cavis Ships with Chris Cavis and Chris Cervello. And get your air domain news and analysis from the Air Power Podcast with JJ Gertler and Vago Muradian. I'm Laura Winter. Thank you for listening.